You woke up today a little poorer than you were yesterday and nobody told you. Not your bank. Not the news. Not the people who built the rules you live under. But this isn't just another story about prices rising, it's a roadmap. Because by the end of this video you'll know exactly how to protect what you already have, where to move your money so it grows faster than prices, and how to turn this wave of inflation into an advantage for you and your family. And if you stay until the end, you'll see the method investors and even central banks use to turn inflation into profit while everyone else quietly loses. Think of your savings like a glass of water with a tiny hole in the bottom. You can't see it, but every day it leaks just a little more. That hole is inflation. The goal of this video isn't to scare you about the leak, it's to show you how to plug it, refill it, and even make it overflow again. Every paycheck you receive already arrives lighter than it used to be. The same salary buys less food, less fuel, less future. When the hole is small, we ignore it. When it widens, we call it a crisis. But the truth is, the leak never stops, it just changes speed. And if you don't build a system that outruns it, the system will quietly drain everything you thought was safe. You've been told to save. For emergencies, for retirement, for later. That used to work when money held its value. Now, doing everything right can still make you fall behind. Because the people who act fast, who move money before it melts, are always a step ahead of those who wait for permission. You can wait, or you can move. 5% inflation means that if you earn 2,000 euros a month, you're losing 100 in real value. That's a bill, a week of food, or a safety cushion gone. Multiply that over a year, and your 12-month effort just shrank by one whole paycheck. The truth is simple. Inflation is not a random storm that passes. It's a feature, a quiet strategy governments use to shrink their debt. When debt is too heavy, they let prices rise so the numbers look smaller. Rome did it by shaving silver from coins. Weimar did it by printing paper until bread cost billions. We do it digitally with cleaner fonts and better marketing. The pattern never changes. The question is whether you repeat it or break it. Cash feels safe, but it melts. Your first move is protection. Convert a slice of your savings into things that resist printing gold, silver, broad commodity funds, productive shares in companies that sell what people must keep buying. Energy, food, medicine, transport. Even a small anchor changes everything. When inflation rises, your anchor rises with it. You'll see people arguing about prices while your assets quietly absorb the storm. Protection isn't fear, it's peace. Central banks themselves are buying gold at the fastest rate in 50 years. They aren't collectors, they're hedging against their own system. Follow what they do, not what they say. To make this real, imagine two families. Family A keeps all its savings in cash for safety. Family B moves 20% into a mix of gold, energy ETFs, and agriculture stocks. After a year of 5% inflation, Family A's cash buys less of everything. Family B's anchors rose roughly with prices. Same income, same country, two opposite results. The difference wasn't luck, it was motion. Start small. If you can save 100 this month, anchor 20. Do it automatically so emotion never decides for you. Protection works when it's boring, not when it's dramatic. A friend Daniel did everything right. Saved 10,000 euros, skipped weekends out, packed lunches, waited patiently. He felt proud until we compared what that money bought 2 years ago. 8,000. He hadn't lost 2,000 euros, he had lost 2,000 of power. That night he said something that stayed with me. I thought saving was winning. It used to be. Now, winning means saving differently. Daniel didn't panic. He started anchoring. Within 6 months, his net worth stopped melting. For the first time in years, he said he could sleep. That's what protection feels like, not profit, but peace. Inflation punishes predictability. If your income is fixed while costs rise, you're rowing with one oar. You don't need to quit your job, you need a second gear. Think of income in two categories: active and adaptive. Active is what you trade time for. Adaptive is what flexes when the world shifts. When prices rise, adaptive income keeps pace. One skill you can sell directly: writing, design, video editing, coding, turns you into a price maker, not a price taker. One product or service that sells while you sleep: a course, a digital template, a small tool turns inflation from a tax into a tailwind. One investment that pays you dividends, royalties, rentals, turns fear into fuel. Fear. You don't need all three. Start with one. Add another next quarter. Small moves compound faster than panic. Maria was a nurse who loved her job but hated watching prices rise faster than her pay. She learned basic graphic design online, started selling printable templates on Etsy, made 40 euros her first week, 300 the next month, and by the end of the year, her side thing covered her rent. Inflation didn't scare her anymore because she'd built a lever that moved with it. That's the difference between surviving and adapting. Adaptive income gives you dignity back. When you can create and sell value yourself, no policy meeting decides your quality of life. Forget the headlines. Most headlines arrive late after the money has already moved. Learn to read the early indicators. Watch 3 simple things: the 10-year bond yield, the dollar index, and your own cost of living. When yields rise and the dollar weakens, faith in paper money slips. That's your early warning to shift a bit more into anchors. When yields fall and the dollar strengthens, hold steady and breathe. Do this once a week, Sunday morning, 10 minutes. You'll feel calm because you're informed, not flooded. Signals aren't noise, they're navigation. They turn chaos into coordinates. If inflation were only numbers, we could fix it with math. But it's psychological. When prices rise, people stop thinking long-term. They chase quick fixes, easy loans, tiny comforts. They become easier to control. That's the hidden power of inflation. It doesn't just shrink money, it shrinks horizons. You break the spell by planning further ahead than fear allows. Write goals in real terms: how many hours of freedom you want, how much security your family needs. Once you define them, inflation becomes a background noise, not the soundtrack of your life. History rewards early movers. In the 1970s, those who owned tangible assets kept or doubled purchasing power, while others watched savings evaporate. In 2008, investors who understood liquidity flow bought real estate and equities when panic was loudest and tripled their wealth. In 2020, those who built digital income streams survived lockdowns that erased traditional jobs overnight. Every crisis teaches the same lesson: position before permission. A retired teacher I met in Warsaw kept her pension in cash because it felt real. When inflation hit double digits, she realized her lifetime of savings could no longer buy half the groceries. Her neighbor, a mechanic, had bought farmland 10 years earlier. Today, his land rents cover both families' living costs. Different education, same country. The difference was preparation. Inflation respects action, not intention. Maybe you're thinking, what if I don't have enough to start? Start anyway. 10 euros into a commodity fund is 10 more than 0. One freelance client is infinitely more than none. One signal check a week beats scrolling headlines every day. Action beats perfection, always. What if I buy and it dips? It will. Real things wobble before they rise. You're not speculating, you're insulating. What if I'm late? The only late move is the one you never make. Inflation won't wait for your confidence. Each step anchor, income signals, reduces anxiety because it replaces fear with rhythm. Calm compounds. Panic explodes. Inflation also inflates distraction. Every headline screams, every feed scrolls faster. You start reacting instead of deciding. The antidote is silence and a calendar. Sunday signals, Monday skill. First of the month, anchor. That's it. The world can scream. Your plan can whisper. When you simplify, you regain bandwidth. That mental clarity is wealth no chart can measure. People will tell you it's complicated, that only experts can navigate it, that waiting is safer. Ask them how long they've been waiting. Ask them what waiting has earned them. The market doesn't reward the smartest, it rewards the prepared. You don't need to predict the future, you need to prepare for it. The difference between fear and foresight is a plan written down before panic begins. Month 1. Set your anchor 10 to 20% into assets that hold value. Month 2, build one new income lever. Month 3, start your weekly signal check. 3 months, 3 steps. Repeat for a year. You'll look back and realize you stopped reacting and started steering. The numbers may not change overnight, but the feeling will. That calm is wealth. That confidence is freedom. Inflation just hit 5%. That's the headline for most. For you, it's the trigger the moment you stopped being passive. You saw the leak, you learned the pattern, you built the shield. You didn't wait for permission. And that simple shift from fear to framework is the difference between losing quietly and living deliberately. The system was built to make you tired. You will make it tired of trying. Share this with someone still saving and melting money. Show them the 3 steps. When they act, you both win. Because awareness spreads faster than inflation once it starts. And the more people who understand value, the harder it becomes for any system to quietly steal it. You don't control the tide. You control the boat. Build it, strengthen it, check the stars, then move. This is MacroScope. See the signals, make the moves. I'll see you on Tuesday.